Hello, traders. Let's take a look at the featured stock from yesterday and then let's find a new one. My goal is to set you up with some great trades, and I hope that you'll return the favor by subscribing to my channel and by posting your comments. You don't want to miss these trades, so make sure to turn on your notifications. Let's get started. Hello, traders. We're 3 hours into trading. It is Friday, March 5th. We're going to do a little housekeeping, then we're going to take a look at the market, then I'm going to show you some searches that we are currently running. Of course, I will review our previous trades. Quite honestly, they are all crap. That's because the market broke down. Let's start with the housekeeping first. I had a couple of people grousing on YouTube. Hey Pete, it sure would be nice if you could get these videos out earlier. I'm doing the best I can. I'm providing free information. I'm providing free education. These videos take a long time to render. This is my YouTube channel. If you go down in the description, in most of my videos, I reference in the description link, you can click on my link to Twitter. Before the market opens every day, you'll know my market bias. You'll know exactly what I'm doing. I urge you to click this link if you want to know what's going on and you would have wanted to get out of your positions earlier yesterday. That's how you do it. This is my blog. This is what I had to say today. The market drop will help you in two ways. Here's what you need to do. That's what I'm going to show you today. I'm going to mine for some really good swing stocks in the future. The market is going to continue to go down in the next 2 or 3 weeks. This is going to be a bottoming process. So for longer term swing traders, it's not time yet. But I want to go down into today's commentary and show you the type of analysis that you're going to get. I reference the economy, I reference what's going on in bonds. If we continue to scroll down, you'll see this is what you need to be doing on market pullbacks. These are great opportunities for two reasons. One is the stocks that we liked, we're able to get in at a better price on a pullback like this. The second good thing is that we can see how well they're holding up. If the stocks are tanking, that means that they are full of fluff and that they are not the real deal. On the other hand, we can search for relative strength and find those stocks that are strong relative to the market. Those are going to be the stocks we really want to own. If we continue to take a look at my daily comments in my blog today, here's the takeaway. Right here. After a heavy round of selling yesterday, expect the bid to be tested this morning. Opening gaps higher have been faded recently. The Senate is likely to pass a stimulus bill this weekend, and that should keep sellers at bay. Look for an early pullback and stability the rest of the day. If we did not have the stimulus bill pending, I would have favored selling pressure into the weekend. This is what the market's done today. Opening gap higher. Sell off in the first half of the day. Nice rebound. That rebound tells me that there are buyers. We made a higher low, double bottom based off of yesterday's low. I believe that will be preserved. Let's go into the daily chart and take a look at that. And you can see we've got a downward sloping trend line here that I referenced. For the last month, I have been referencing this upward sloping trend line, and I've also been referencing the 50-day moving average, which comes into play right there. Every single trade that I've shown you had the caveat. We want to sell out of the money bullish put spreads. Why? Because we want to take advantage of time premium decay and we want to distance ourselves from the action. Why? Because I don't feel that the market is going to have a massive blow-off rally, and this strategy gives us a higher probability of success. That's why we're not out there buying calls. In every video, if the market breaks this upward sloping trend line, if the market breaks below the 50-day moving average, you must buy your bullish put spreads back. If the stock breaks the technical support level that we are leaning on, you must buy the bullish put spread back. I have a couple of videos on my YouTube channel that tell you how to leg out of positions. Yesterday, when we had a very weak market open, and when my market comments were, I am getting out of all of my bullish put spreads on the open today. I don't care what the market is going to do. I'm getting out. That type of commentary should resonate with you. Hey, it's time to take my lumps. It's time to go to the sidelines. Yes, I'm very happy that we're out of the positions right now, but you've got to be vigilant. You've got to read my daily market comments before the open. Obviously, try and watch my YouTube videos. Wednesday night, I recorded a video for my members. I released that to one option members, and we were getting out of everything Thursday morning on the open. We took a hit. We were wrong on the market. The support did not hold, and we had to take our lumps. As painful as that is to do, now we're sitting on the sidelines and we are watching stocks come in, and we are going to find some really good value. We're not having to sweat bullets during a drop like this, and we'll be able to get in at better prices in the next few weeks. I know we're going to be able to recover our losses very, very quickly. And that's the mentality that you need to have. A lot of novice traders, they refuse to take losses. In fact, one of the worst things you could do is to average in on a loser. So, hey, I liked it up here and I'm going to buy some more. Oh no, it dropped again. I'm going to buy some more. That is a horrible strategy. The only time I'll ever average is I'll average when it's moving my way. But in any event, you have to take your losses, move on, wipe the slate clean, and now we'll be able to regroup and we won't be sweating bullets while the market continues to search for support. I do believe that this market drop right here is going to take time to resolve. And if I go into a longer term chart, I'm going to go into TLT and I'm going to show you this move. This is a nasty move. I've been referencing this also, downward sloping trend line. If you watched my video that I posted on Thursday, which by the way, after this video, please make sure to go back and watch the video from Thursday. If you have not watched it, I go through all of the warning signs that were out there that I highlighted to my members on Wednesday night. Really, really good educational information, because you want to be able to identify these warning signs and get out before you have a big drop like we had Wednesday and today. So make sure and go back and watch that video from Thursday. But I was pointing out that we had this downward sloping trend line on TLT that we broke through. I suspected that we had a capitulation low in TLT. However, once I saw a continued sell-off in bonds, and that price action that I saw Monday was very puzzling and a bit concerning. It told me that this was not the real deal, that I knew we had an issue and that bonds were going to continue to sell off. Let's go into a SPY chart because I want to do a little bit different overlay. SPY, then I'm going to overlay TLT. So we'll be able to compare the two. And I'm also going to go into a weekly chart because I've had many people ask me, Pete, how long is this going to last? You can see TLT has been selling off very, very hard. That means that interest rates are moving higher. If I look back to a similar period and I go back to 2018 as a time frame, that was when we had the tapering, the taper tantrum, that's a bit of a tongue twister, back in 2018, and we can see what happened with the market and what happened with stocks when we went through that period. And you'll notice that as the TLT sells off, the market initially didn't have a very big reaction to it, but eventually it did correct. And that's where I think we are right now. I think that we have a market that's trying to digest higher interest rates, and the initial reaction is not favorable. So we're going to go back into 2018, and there you can see this is when bonds started to decline. Right in here, you can see the bonds started to sell off a little bit, and they weighed on the market there. during this drop right here. You can see how there's a lag. Bonds fall, market was still going higher, and then eventually you get your drop in the market. But bonds start to stabilize and they kind of inch a little bit higher, so the market goes, oh, everything's good, green light, continues to rally until we get this next leg lower in bonds, and then whoosh, there goes the market, even dropping below the 100-day moving average. Well, from this point right here to this point, that is a 20% correction. And given that this is a weekly chart, you've got about 4, 8, 12, 16, probably close to 20 months before everything rebounds back to the old high. That's a long time. I don't know that this one's going to take as long. My point is, this is not going to last a day or two. This is probably going to last at least a couple of months, in my opinion. And I think we'll probably see some type of bottoming process. What will happen is that the economy will rebound very quickly because we've got new coronavirus cases starting to decrease substantially. We have states reopening, so I believe the economic rebound is going to be very, very brisk. And typically, when interest rates are moving higher initially, the market sells off because the market is worried that this is going to strangle economic growth. In this particular case, I believe we've got so much pent up demand that we don't have to worry about slightly higher interest rates. We are going to be smoking in the next probably 2 months. I believe the economy is going to be on track. Within the next 3 or 4 months, we are going to be clipping along like mad. So that's my take. I think that we've got a bit of a bottoming process that we have to go through right now. I think that this lasts at least another few weeks until we find that eventual support. Where might we find that support? That's the next big question that I get. Well, typically on the start of a nice orderly channel like we have right here, the market's typically going to go back to about where that channel started. And that was a technical breakout there, a technical breakout there. If I draw a horizontal line here and here, we can see that that comes into play right around S&P 5 or SPY 350-ish. So 350 is kind of the level that I'm looking at. Let's put the 200-day moving average up. Well, look at that. Comes into play almost at 350. So I think 350 is not an unrealistic target. The 100-day moving average is certainly within range right now. We're getting a little bit of a pop right now because of the stimulus. Let's go back into the 5-minute chart and let's watch what's happening to the market. Right now, we do have a little bit of a bearish cross in here, but the market's been able to claw its way back almost to the high of the day. This is a really nice V-shaped bounce, so pretty strong. Will we be able to get through the high today? I'm not sure. Again, we've got the stimulus bill coming over the weekend. That's probably got a lot of buyers excited, but I believe next week, once we find out everything that's in it, could be a little bit of a sell the news event. Yes, we had a decent employment report today, better than expected. That also should keep people a little bit optimistic right now. But ADP came out this week. I don't follow the government's number as closely as I do ADP. ADP processes payroll for small and medium-sized businesses. They have their finger on the pulse of the economy. They know exactly how many checks they cut. And so I watch ADP very, very closely. I feel that, anytime you're dealing with a government agency, and then there's holidays and there's seasonal adjustments, there's all sorts of stuff in their number. I feel that ADP is a very clean number to look at. So I'm expecting job improvement. I'm expecting an economic rebound. I'm not looking for this to be a 1 year or 24-month type of recovery. I think that we've got about a month to find a really nice support level, and then we should really start recovering as far as the market very, very quickly. So let's take a couple looks at some stocks that are in heavy selling, because I get this question too. Hey, Pete, you always show bullish stocks. Do you have any bullish or bearish searches? For every bullish search in Option Stalker, there is a bearish counterpart. You bet. And here's a nice one. Excuse me. We've got Tesla breaking the 100-day moving average. It broke the 50-day moving average. It broke that horizontal support. It's been coming up on our searches for a very long time. CRWD, beautiful breakdown there, horizontal breakdown there, down through the 100-day moving average. Of course, we've got lots of bearish opportunities. And I'm going to click through this list. There's a head and shoulders right there, BILI. There's your head and shoulders. There's your neckline. And a close below that neckline at 115. That would be bearish. So you can see, yes, very easy to spot these. We do have bearish searches. So most of you are probably traders who like to buy stocks. If that's you, you need to wait for this market to settle down for that support to be established, and it's going to take time. What do we do when we're looking for that support? What should we be doing right now? We're going to go into custom search. We're going to put option liquidity, and we're going to raise that to a level of, say, 2. The important thing right now is cast a wide net. The primary thing that we want to be looking for as the market is selling off, show me stocks with good option liquidity and show me stocks that have relative strength. I want to see which stocks are holding up really, really well. As I go through a list like this, you're going to readily be able to pick out certain groups and sectors that are very strong. And as I look through the list, it's very easy for me to spot energy stocks, basic material stocks. There are a lot of banks in here. What you want to do is try and go in, and there's some biotech stocks in here also, which would be good. When these stocks are holding up well relative to the market, you know that as soon as the market finds support, these are the stocks that are going to take off. So look for the ones that aren't in those groups or sectors. Yes, you want to have exposure to the strongest groups and sectors, but know that some of them are defensive, meaning that you have a rotation into these sectors as a flight to safety. So beware of those, because when the market starts to rally, you're going to see money flowing back out of those sectors. So if I go through the list visually here, a couple that pop out at me right away. Cerner, that's a healthcare stock. We'll take a look at that. Nothing too impressive there. It's got relative strength because it's sold off so hard. I'm going to just continue to go down the list. Dell was one that caught my eye. Beautiful. Look at that. I'm sure that is partly because of the stay-at-home play. I don't know what Fizz is, but that one has been a high flyer. It's finding support here today after earnings. That's interesting. Downward sloping trend line above the 50-day. Yeah, nice. I think that's a software company. I mean, a soft drink company. I'm going to continue to go down the list. You know I like Google. My gosh, out of all the tech stocks, this is the strongest one. I think I highlighted this 2 days ago. QQQ getting buried. Google has been able to preserve this breakout, this gap right here. Look at how strong it is. Yes, Google for sure. That should be on your wish list. You get any kind of pullback there. Here's another one that I found, IQ, which I don't know a lot about the company, but I love the strength. Look at how well this stock has held up during the market sell-off. Here's what we're going to do is I'm going to put up IQ, and then we're going to put in QQQ. You can compare. That's what QQQ has done. I believe this is a tech stock, and look at how that stock has rallied. So initially, I want to make sure that I am casting a very wide net. I don't want to fill my custom search with a bunch of other nonsense, because right now I'm just looking for relative strength, and I am putting my wish list together. And I'm going to continue to look down the list, see what else we've got. Hey, look at this, Lyft. That's kind of cool. Let's see what Lyft is doing. And I'll show you other ones that might be coming up on the list. Look at how strong Lyft is. You got the market sell-off. That stock continuing to move higher. That's nice. That's the process we go through. Oracle, another tech company. Look at that beautiful breakout there. Market down hard. This stock is clawing its way higher. That's exactly what we want. These are the stocks that are going to run hard as soon as the market finds support. So that's the process that we want to use. And I'll show you one other thing. Let's say that all of a sudden the market decides, yeah, it wants to go higher. This is not going to be a bottoming process. We're going to be right off to the races right here, right now. Well, then what would I do? Then I would be looking for stocks immediately that have done well in the last couple of days, and I would be going into my HA reversals. Those are the Hake and Ashy searches that we have, and I would be looking for two nice bullish bars in a row. These would be my candidates right in here. And these are actually some nice candidates right now as I take a look at the list. These are going to be stocks that are moving higher. I'll move it off to the side here. Take a look at a couple of them. I know MRO's been strong because I've been trading that one. Lyft is right in there. FANG. Really, really nice. You're also going to be looking for stocks that have a reversal. This HA reversal I stands for two bearish bars followed by two bullish bars. Let's see if we get anything in here. Not yet. Still a little bit too early for that. This is another reversal one where you've got a bearish bar followed by a doji followed by a bullish bar. These would be excellent ones to take a look at as well. So those are the types of searches you'll want to use. Also, let's take a look at ADX. Let's find a stock that's strong on D1 as far as ADX. It's actually quite a few of them. These stocks have fantastic upward momentum right now. This would be a good thing to use. Combine that with heavy volume today. Now you've got a lot fewer stocks to look at. Maybe you want to add relative strength in there. That's also going to be an excellent search. Heavy volume, relative strength, HA patterns, strength versus SPY, buy trade signal on a daily basis. All of these things are great variables to use to narrow that search down so that you can find the stock that you want to own right now. We have been on DISCA for a while. And look at that baby go. One of our traders in the chat room has been running this thing for everything. He was in here and really rode that stock a long way. MLCO, really nice. That's a casino stock in Macau specifically. That had a really nice breakout and a great run. These are the types of stocks we're going to be looking for. And this is exactly how you find them. So if you are on the sidelines, which I hope you are, and you're going to be looking for some really good bullish stocks to take advantage of over the course of the next few weeks, you're trying to put your shopping list together, you should come in and take the Option Stalker 2-week free trial. On my website, I've got lots of free tutorials. I've got a free ebook. I have so much dang free information. Before you even take the trial, make sure you go into my tutorial page, take a look at all the things that you can take advantage of before you even take the trial. I highly suggest that. In fact, there's a video that I recommend that you watch, and it is how to get started. And I'm going to show you that link, and I'll show you that video. It's right here. How to get started. Go to www.oneoption.com, click tutorials, watch these first 3 videos. It's not going to cost you a nickel. If you decide you want to take the next step, register with the website. You don't need to pay me anything. I'm not going to bury you with emails, promotional emails. I don't do that. I don't have time for it. Go in and read my free ebook. You'll learn the whole process that we use to find trades. So to recap, I can go back into my list and I can show you all the trades that we've done, they're all getting buried. I mean, we needed to be out of these trades. So you needed to watch that 50-day moving average. You needed to watch that upward sloping trend line. You needed to exit them. There is one stock that we are long, and that's Mosaic. And this is a long-term position. We are long in the money June options on this one. I love this stock. I think this stock is going to continue to move higher. Market down, down, down. Stock holding its own. Relative strength. That's what we're looking for. That's the edge that we use. That's all I got for you today. I hope that this market decline has not hurt you too badly and that you've been able to adjust, that you were able to exit your positions on a timely basis, and that you've been able to keep your risk relatively small. If you've got a lot of cash on the sideline, congratulations. You are going to be in a great position in about another month or so when the market starts to form support. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.